properly invest in dividend stocks.
Guys, welcome back to the channel. Today we're going to be starting a new video series on how to properly invest in dividend stocks. So I've been investing for the past, I think, 4 years now, 3 to 4 years now, and I've developed a certain way on how to research and I guess pick the stocks that you want to be putting your money in, right? A lot of people, what tends to happen is that they'll invest blindly, or somebody will tell them, hey, put your money in this, it'll grow, and then they'll do it. But I truly do believe that everybody should know at least the basics on how to analyze a company and read a balance sheet and read income statements before they put their money in that company. So today I picked the stock Johnson& Johnson because it's one of the stocks that I'm looking at to buy very shortly here. Hopefully in the next week or two I'm going to be starting a position in there. But before we do that, of course, I have to do my own research, and that's what we're going to be doing together. So let's start it off. So Johnson& Johnson, before I did my research on them or anything, I always thought of them as just a simple pharmaceutical company. I knew that they did certain things for consumers like diapers and baby powder and Listerine and stuff like that, but I mostly thought that they were a pharmaceutical company and they owned a bunch of different drugs. But just with some simple, I just went on their website on johnsonjohnson.com, and on the investors page, well, they gave this, and it kind of breaks down on how they earn their revenues. So right after I saw this, it kind of opened my eyes to how big Johnson& Johnson actually is. When Before you do any type of heavy research in a company, I believe that you should look at it as a whole, right? Just like quickly over it, certain things that you should be looking out for before before you do heavy research, right? Because you don't want to be wasting your time while you can be researching a better company. So when you go on their investors page, this is one of the pictures that they show, and it shows their different products and how everything is divided, right? So they are, yes, I was right, mainly a pharmaceutical company. So they have $11.1 billion in 2019 that they got from these drugs. Now, these are not the only drugs that they own, but these are some of the bigger ones. The list is very long. A lot of them did lose their patents, so there's generic versions of these, but most of these ones over here still have their patents, and only Johnson& Johnson can sell them. Next thing is they almost have $6 billion coming from medical devices. I did not know at all that they sold medical devices, one of which is super cool because that lets me know that they do diversify the way that they're getting their money, and that's always a good thing with any company you're buying. So, and third is the consumer products that they sell. So I knew about Listerine. I did not know about any of these others. Some of these products I use myself, like Tylenol and Motrin, and yeah, which is super cool because I did not know about the other brands that they own. And this is not all. They have a whole list of brands they own. Johnson& Johnson is very big, and they have a market cap of almost there you go, $400 billion market cap. This company is huge. So overlooking just Johnson Johnson, you immediately know that one, they're absolutely huge. They're bringing in almost $20 billion there a year, and they have a market cap of over $400 billion. So it is on the bigger side of companies on the stock market. And when you're looking at companies who have a $400 billion market cap, don't expect these companies to be growing. These are not growth companies. These are very stable, slow growing companies. That's how I would class them. Second thing, after you kind of look at the overview of the company, you should probably look at the price per share, right? Especially when you're dividend investing and not growth or value. Usually there's a reason why a certain dividend stock is at that price, right? Nobody's investing in Johnson& Johnson expecting 20 to 30% price growth in their stock for the next like 2 to 3 years, right? When you're investing in Johnson& Johnson, it's because you want it for that income. Yeah. So sorry. Yeah. So you want it for simple income reasons, right? And so when you're looking at a stock and you see the price at a certain price point, there's a reason why it's there, right? There's a reason why dividend investors are not going out of their way to go in and invest in these, you know, 5, 7, $8 companies with a dividend yield of 10%, 11%. as a dividend investor, your main goal, well, your main objective is to pick companies who will never cut their dividend, right? You want to invest for income for the long term. So a higher price per share, now don't get me wrong, it's not always good, right? Because you're paying a lot for a company, but usually that indicates that it is a stronger company, right? You're not looking at a $20 to $30 company. No, you're looking at a $152 company per share, which is always good. So it's just a little thing that I don't personally find it that important, but it does, like, I guess it gives you a certain idea of what the company is and how they're doing. Next thing that I believe is very, very important is their earnings per share. So before I do any type of deep analysis of a company, I usually look at the earnings per share. What I want to be looking at when it comes to earnings per share is, are they growing as a company? And when it comes to Johnson and Johnson, when you look at their earnings per share here, you see that they're maybe not growing as probably fast as I want them to, but when you're looking at a $5 per share earnings, they're huge, right? You can't expect them to grow 10 to 20% every year. So what you're usually going to be looking for is slow but modest growth, right? So 2015 they did $5.48, 2016 $5.93, which is really good per share. 2017 there was a giant tax reform in the U.S. and yeah. So I usually wouldn't even count 2017 in reports when I'm calculating averages because it's such an anomaly. But in this case, I still put it in here just to show you guys how it looked like. 2018 $5.61 and 2019 $5.63. So for me, the most accurate ones I guess would be 2015, and then these 2 years I wouldn't really count it because right after 2016 we had the tax reform. So I guess we wouldn't really know what the true growth was. And after the tax reform, well, this is how much they started making. All right. So to me, it's kind of like they were making $5.93 beforehand. Tax reform came. Now they're making $5.61 per share. And that's how it's going to continue growing. Right. So in 2019, they did 2 cents more than the previous year, which is small growth, but again, we always want growth. When we're gonna start doing our deeper analysis of Johnson and Johnson, we're gonna be looking at more of a 10-year chart, not a 5-year. 5 years is usually just for like you quickly look at it and you see how the company is doing. After usually, if the earnings per share are declining every year, I usually go and see a 10-year chart, and if that's declining too or it's very stable, I usually just pass on the company. I don't want a company that's not growing, right? Because if a company's not growing, price per share is not growing, dividends not growing, payout ratio is going up higher, and overall, I just don't see that as a company that I would buy and hold forever, right? I'm a buy and hold forever investor. I don't plan on ever selling any of the shares I do have in my portfolio that I consider as core stocks. So that's why earnings per share is one of the key indicators of if you should invest in the company, if you should do a deeper analysis and a deeper dive into the company. After earnings per share, it's dividend, right? Us as dividend investors, the one of the most important things to us is the dividend that's going to be coming in. And Johnson and Johnson yearly pays $4.04 dividend in USD. That equivalents to 2.66% yield, and we have a amazing payout ratio of 53%. That means that out of the profits that they make each quarter, they're only paying 53% back to the shareholders. And that's after paying all their bills that they have to, all the employees doing what they have to. Out of the profit that they still have every quarter, they're still keeping 53%, which is really something good, right? Because most companies who are paying close to this dividend usually aren't in the 50. They're usually going to be in the high 60s or 70% payout ratio. So seeing this is really good, especially for Johnson and Johnson. Next thing is going to be the dividend growth rate, right? Us over time, especially when we're young, we want to invest in companies who are going to be growing their dividend every year. Why? Because we want to be keeping up with inflation, and the higher the dividend growth gets over time, your dividend yield on cost grows too, and you're just making more money on your initial investment every year. So, for me personally, if a company is not growing their dividend, it's an automatic pass. I usually don't even give it a second look. If they're not growing their dividends, that means they're not keeping up with inflation, and I really don't care about that, about a company who's not keeping up with inflation for me. So inflation, let's say on average here in Canada, it's about 2.4%. We saw that in I think the first video I posted there. So for me, I need the company to be at least covering inflation rates every year. But more importantly, they have to do kind of more than that, right? Because if they're only covering inflation, well, then I'm still flat every year, and that's the same amount of dividends I'm getting every year, right? So I usually try getting a company between the 6 to 10% dividend growth rate. If we look at something like Starbucks, it has a 20% dividend growth rate. Those are the companies I usually like investing in. Yeah, and that's pretty much it for dividend growth. So just make sure that the dividend growth is at least keeping up with inflation. But you do want to be looking at something more between the 6 to 10% dividend growth rate averages for for the third and the fifth year. The last two things are credit worthiness. Now, credit worthiness just means that how likely will they be to get a to get a loan from the government or from the banks or something if something was to happen later on in probably the next video or the video after that. I'm going to be showing you guys how to read a balance sheet, and that's well, that's going to tell you how the company's doing for their fundamentals. But credit worthiness just means, are they eligible to get more money? And you usually want a company that's either triple B plus or more, right? When it comes to credit worthiness. So anything above triple B, it's good. As in Johnson Johnson's case, it's a triple A, which is, as long as it's over triple B, I usually don't do any more research than that. It's good enough for me. Last thing, which is very important to me, is you want to see if the company overall is growing. Now, Johnson and Johnson is not a high growth company, like I've said before, but they do slowly grow in share prices over the years, right? So if you look at Max, you're gonna see that there is a upwards trend, and I don't believe that to stop anytime soon. So Johnson Johnson has been going through a little bit of a tougher time recently because of all the accusations they've been through with some of their products causing cancer. But when you're running a business this big, you're bound to have fights in court and stuff like that. So I wouldn't be too worried when it comes to short term. But as you can see, during if you're investing for long term, as you should, uh, the price should be growing over time. So guys, that's pretty much it when it comes to the way that I look at stocks before I do a deeper analysis of them. These are some of the stuff that you want to be looking out for, and in my next video I'll probably be teaching you guys on how to read a balance sheet and look at some of the other metrics that are very important when dividend investing. So thank you guys very much for watching, and have a beautiful day.